So, but actually, I'm kind of happy to talk about it. I didn't get a chance to last time here. So, anyways, we walked out. It's funny, last time, like, man, we didn't get any tax questions here. I was kind of ginned up for it. So, anyways, so let me talk about the bill here first. And there's probably, I'm guessing by the question, maybe it's a difference of philosophical opinions, and that's fine here as well, too. So, what we have is, I mean, we have about the state of Iowa spends about $8.6 billion right now as our budget. I think it's proposed to go to, or maybe 8.5 to go to about 8.7, 8.8. We don't have joint budget targets yet, but we're just going to put out that delta of about 4%, right, increases next year. We have a $2 billion surplus, but the reality is, just to give a quick rehash, in 2022, we passed the largest tax cut in Iowa history. And that basically consolidated all of our rates down to a flat tax of 3.9% beginning of January 1 of 2026. So we, this last January, we knocked the rate down again. Next January, the rate after that, and then we'll be down to that 3.9%. There's a bunch of other individual things there too, including eliminating the retirement income. So this $2 billion surplus that we have right now, that basically is going to get whittled, and that's kind of like baked into the cake for this current tax cut right now, okay? Now, lateral to all this, we have about $3.5 billion in the taxpayer relief fund. The taxpayer relief fund, and this is a little history lesson, was created back in 2011, I believe, 2011, 2012. And that was a split bipartisan creation, Democratic-controlled Senate, Republican-controlled House. And people recall that's right after we came out of the financial crisis, you know, with the housing market imploding, everything along those lines. State of Iowa saw a massive inundation of cash that year, and there was a question of, okay, we can't just spend all this, so again, bipartisan split control created the taxpayer relief fund. The letter of the law for the taxpayer relief fund is to use it to eliminate, or not to eliminate, but to reduce income taxes and retirement taxes. Bipartisan letter of the law, right? People are like, oh, that fund out there, you can use it for this or that. I mean, that would be undermining the entire creation for it in the first place. Not that you can use it for a couple smaller things, but that's for future legislative sessions. But really, that's what it is. Income tax relief, retirement income tax. Well, we took care of the retirement tax. We eliminated for all retirees here in the state of Iowa with qualified income on thereabout. So the question becomes, is we've accumulated $3.5 billion in the taxpayer relief fund. How do you use it? Throughout the interim, you know, the governor had her tax proposal to basically do increased acceleration for this last year and this year and take it down from what's projected. Essentially, she wanted to go to 3.5% in 2025 as opposed to 3.9 in 26, which is current law right now, right? But the question, or the problem really becomes, is that you have this $3.5 billion to be used for income tax relief, and how do you use it, right? And I don't want to get too wonky on the budget here. Problem is, if you do too much up front, it can really mess you up on the back end, right? And we got a couple bigger outlays. There's going to be a large Medicaid increase here this next year and some other things. Talk about things like teacher pay too and stuff like that. That, you know, I think from a Senate and House standpoint, that we'd like a little bit more visibility on what the budget looks like before you start to do some large cut. So where the Senate and House came together on this was, as opposed to, you know, moving this rate here, that rate here, this year, why don't we just keep this money offline and invest it like all Iowans do, you know, whether you have your pension or your 401k or whatever it might be, or like a business, when they make a profit, they reinvest their business to grow the business. Instead of looking at the same $3.5 billion and figure out how are we going to, you know, cut this rate, what we propose is putting this into a trust. And this trust would contract through IPERS. I've seen some less than critical thinking rhetoric that we just throw it into IPERS and it's all one big pot, which isn't reading the bill. But we create a separate trust out there, just like Iowans do for their retirement and businesses do to grow their business. And we actually grow this $3.5 billion pot. That's probably the smartest thing. We've never done it before, and actually no other state's done it in the nation for something along these lines for this particular mode. So that way, you know, we're not cutting, you know, too fast in this one area that we got a budget problem in 4 or 5 years. So what it does is that if this trust grows basically 5% a year, IPERS is, you know, like it's the most trusted name in Iowa. They grow probably about 6 to 7% any given year. The earnings from that pot, if the sales tax rate, so it's a responsible mechanism, the 3% that hits that at least, then the earnings are used to buy down the rate. So what's that end up being? Maybe about 1/10 of a point every year, you know. But it's the most responsible way to go about using this money, as opposed to, okay, we're just gonna go down to 36 and stop and pray to God that the budget looks okay in 29 or 30. So I think it's a really neat way of going about it. So I guess where the question is, how are you gonna pay for those things? Well, we're using the earnings and income of that to buy down over the course of 20, 25 years, you know, thereabouts, to do that, as opposed to one cut. I mean, you could always go back to the analog of, well, all tax cuts are cuts in services, and I just don't subscribe to that. That's where it's going to be a philosophical difference of opinion. But for us doing the 2018 tax cut bill, 2021, 2022, we're always told, oh, we're going to be Kansas. Well, we ain't turned to Kansas yet, because we are pretty fiscally responsible up there, and this is just one more example of being fiscally responsible, as opposed to just doing another cut, trying to find a way to actually use this and grow that pot of money for all Iowans.